Multicoin provides investment advice to certain private fund clients that own HYPE tokens discussed herein, and stand to gain in the event that the price of the token increases. Multicoin's HYPE valuation report discussed in this podcast can be found as a link in the show notes. The report includes important disclosures concerning the data and assumptions by Multicoin discussed today. Also, any trading discussion is for informational purposes only and is not a recommendation to engage in derivatives, leverage, or any specific trading strategy. Enjoy the show.
GM everyone, welcome back to another episode of Touch Grass Podcast. We have Shayon from Multicoin again. They recently released their thesis and report on Hyperliquid. I think it was a couple of weeks back, and it has kind of created this awesome back and forth on Twitter. People talking about the base case, different valuations, how they reached that conclusion, best case, worst case, and all of that. And today we're kind of diving into the whole what the report entails, and as well as what Multicoin and Shayon think about Multicoin's current position and what the future outlook looks like. But yeah, Shan, welcome to the show again. How are you?
Thanks for having me, guys. Really excited to be back, and yeah, it's great to see you.
Awesome. Where do you? I want to start with the last time you were on the show. You talked about the Multicoin's new investment thesis. We talked about the different themes, and one of them was globalization of the access to the different platforms, and how Hyperliquid is one of them. And you guys have already invested by that point. How have you how does this particular report or this idea fit into that broader multi-coin thesis? And yeah, we can start there.
Yeah, I mean, I think we can start all the way back, even like from the inception of Multicoin. We put out the first version of our crypto mega thesis documentation, which laid out kind of three broad categories: open finance, non-sovereign money, and then Web3, which is like broadly kind of distributed architecture for all kinds of all kinds of systems. And open finance has been really the one category out of the other three that has shown the most relative growth in terms of product market fit, interaction, in terms of like what this entire space, what this technology, this asset class enables. um, and I'd say the tenets of open finance were essentially decentralized systems in the form of being permissionless, being censorship resistant, being interoperable, being composable, and essentially a departure from the way finance is done in these closed systems all the way into these open systems where everyone has access, everyone can see what's happening, and they can kind of build on top of it. I think separately, maybe an understated version of the story is, as we've kind of done this over the course of the better part of the last decade, we have seen that no matter what layer of the stack you are operating in, it feels like the end state for everything is to become an exchange, right? Or if you're like a middleware, or you're a DeFi protocol that's supposed to sit at a specific layer of the stack, it just, there's a natural pull from the market to go up the stack, to own the customer relationship, and to build a product that is fundamentally in the form of an exchange. Even every sort of consumer application that has kind of tried to play around and build on these primitives over the last decade, the best mental model for it is as an exchange, where really in this on these ledgers and in these systems, the thing that matters the most is how much transaction velocity is going through it. And in that way, like, the throughput of the system is just the exchange itself, right? And that's sort of the system that ends up capturing all of the value and reliably accruing all of the value and building all of the network effects, the marketplace effects, the things that lead to durable growing enterprise value. And so you just combine those two themes together, one sort of like high level theme and one underlying thing that we've just observed watching protocols develop over the last over the last few years, is the distillation of our thesis, more recent thesis, which is globalization more broadly, which is this ability for crypto to stop being this inward looking thing, which is, for the majority of crypto, it's been people launching tokens and trading tokens for tokens and borrowing tokens against tokens. And it's just been this sort of insular, circular kind of rotation of money. And what's happening now is that people are realizing that these rails are actually structurally superior They are better because they are, they give you access to global capital markets. They are, transparent and verifiable. They sort of allow you to package and move risk around in ways that you could never do before, right? And that means that you can use these rails for assets outside of just crypto. And that's the entire sort of HIP3 deployer net new market style thesis. And I think Hyperliquid is just the purest distillation of that. They've done, there are 1,000 decisions that need to be made correctly in terms of building an exchange that is from first principles, both at, a threshold degree of performance and a degree of sort of, product and sort of, user accessibility. And they just made all of those decisions correctly, repeatedly, time and time again over the course of the last 24 months or so. And maybe I'll sort of start pausing around here, but just that's the thing that's most exciting to us here is Hyperliquid sort of setting the stage and sort of breaking the mold of crypto, being this sort of rails for these internal, endogenous assets, and really capturing all global capital markets, starting with kind of equity style exposure. But who knows, you might see this go into rates and FX, credit, and all these other asset classes in the world. And so that's sort of like the high level for why we're excited about it. But yeah, I'll pause there.
But do you think like one of the things that I had a question about how you guys have become so bullish on Hyperliquid? Does a bit of that does it come from you guys being early to Solana and seeing performance and execution over everything, being closer to users? There are certain similarities in cult forming as well. Does that kind of form around an idea of what a public network or an exchange should look like? Does that kind of flow your thesis from Solana as a chain to an exchange Hyperliquid?
And then Shayan, before you answer on the Sol part, like I also saw Tushar talk about BNB and you guys being early there back in the day. How does that also play a factor here?
Yeah, look, totally. So maybe I'll separate some of these things because ostensibly they're all kind of apples to apples. Like BNB is kind of an L1 as well, but like in sort of a weird way. But and Solana obviously is an L1, but there's clear differences between Solana as an L1 versus Hyperliquid as an L1. I'm sure we'll get into that in a little bit here. But really what being close to Solana from the earliest days gave us as a frame of reference in terms of evaluating Hyperliquid was just a very rational, clear-headed look at the trade-off space, right? Like any distributed system is designed with some set of trade-offs. Now the question is like, what are the trade-offs that you care about? And do you actually make the trade-offs correctly such that you have the highest probability of attaining product market fit for some version of what you want to build in terms of settling or coordinating some kind of financial activity. And so if you step all the way back, right, like you go into Ethereum and you look at all of the design principles that go into building that system, the biggest criticism we've had of Ethereum is that they did not have a scaling plan because they prioritized this notion of some note, and maybe it's like maybe it's being reductive to just call it decentralization, but it's like every decision made at the consensus layer, at the client layer, at just in the packet forwarding layer, every aspect of this is designed for credible neutrality beyond any reason of necessity. Like it doesn't like beyond a certain threshold of credible neutrality, it doesn't really give you that much else. That was always our opinion. And essentially Ethereum was trading off performance for more credible neutrality. What Solana got right was it figured out that people need high throughput, low fees, right? Fast transactions at low cost, simple. And they got to a degree of credible neutrality that was necessary to build that. And then after that, it was just all about making the system faster and cheaper, faster and cheaper, faster and cheaper for everyone, for founders, for net new asset issuers, for large institutions putting assets on chain. And that was essentially them making a separate trade-off in terms of we will design our system to maintain credible neutrality beyond a certain threshold, and then it'll be performance beyond that. And Hyperliquid is basically taking that to the next level. It's on it's essentially a different interpretation of what credible neutrality means. It is a different interpretation of like what a minimum viable threshold validator set actually is, where it is co-located where it is, where it is set up in the world. And what they have essentially optimized for is performance, because they know that in order to build a production grade derivatives exchange that is, at the performance guarantees of a centralized exchange, there are certain things in terms of how the client is built out, in terms of where the validators are, in terms of how packets move, in terms of how the risk engine is built, that need to be done correctly. And it's really just them making that trade-off and essentially designing every part of the system, everything from maker cancels to how they handle liquidations in the queue, and all of every aspect of the system is designed around a vertically integrated architecture, right? And in some ways, Ethereum to Hyperliquid and Solana sitting somewhere in the middle is essentially this migration away from modular to integrated, right? I remember back in the day, people used to call Solana an integrated chain along certain vectors. I'd say Hyperliquid is even more integrated around a handful of vectors, right? In terms of specifically the application layer being the primary application layer and being integrated into the system. So yeah, we've kind of followed this trajectory of crypto for quite some time. And Hyperliquid is very much a core instantiation of that.
So
Yeah,
like
I think
based on the spectrum, like Shayan, would you say like are you guys long Hyperliquid, the Perp DEX, or are you long like the L1 ecosystem that it can turn into? Like with both the BNB example and the Sol example, like we've pointed out that both of them are extremely different, and Hyperliquid maybe sits somewhere in the middle. Where are you guys seeing the next phase of opportunity for Hyperliquid?
Yeah, look, and so this is I'm going to give you an answer that like I hate hearing because it sounds like everyone's hedging. But the answer that I have, and it is genuinely the answer that I hold, which is both. And it's like not satisfying because obviously easier to like pick one, but I'll tell you why. Very importantly, it's both. Um, I think you have to be. It's very difficult today to be long Hyperliquid as either or, because the reality is that even though there is this developer ecosystem, everything from the applications that are built on Hyper EVM all the way to things that are building on top of core in the form of HIP3 deployers and builder codes and now HIP4 markets and things of that nature. If you just look at the numbers, right, the vast majority of the order flow that is going into Hyperliquid today is coming in through the Hyperliquid front end, right? And a measure, one of the things that we care most about, and one of the things that matters the most in any exchange, is the ability to acquire organic taker flow. That is the thing that is the hardest thing to build. You can do all of the market structure, market microstructure, advancements that you want, but ultimately, if you don't have that end taker coming to your platform and placing a trade there, it's all basically not for, doesn't mean anything, right? And so to some extent, as I was saying earlier, Hyperliquid is vertically integrated. The Hyperliquid application that when you go to hyperliquid.xyz and you open up that front end, that is driving the vast majority of the value today, right? Not just in a direct face. Obviously, the market makers on the back end are doing things programmatically, and there's all kinds of flow that's coming into in terms of arbitrage activity and doing more interesting things like that. But the source of the value is who owns the customer relationship. And today, the answer to that question is the Hyperliquid app. So fundamentally, you have to be long the app, right?
yeah,
However, when I look forward over the course of the next 3, 4, 5 years, what is the split of that? I'd say one of the bets that I'm making is, or one of the things that I'm excited about here, is that share coming down over time, right? Which is new builders, new front ends, integrating Hyperliquid as like a point, sourcing, taking the order flow from other parts of the world and routing that liquidity, into into Hypercore. And so you already see this with things like Phantom and MetaMask and Encinico and like all these other builders building out these front ends. Over time, really the bull case for Hyperliquid is not just the front end being the source that is ingesting all of the venue, but you have 1,000 front ends hyper localized for specific regions, for specific types of users, specific types of traders, and then using them as the underlying rails for that liquidity. And so I think in that version of the world, you are long Hyperliquid DL1 because that is inherently an ecosystem, right? You're looking for new deployers of assets. You're looking for new people, taking the underlying rails and packaging it such that new users can take it. And all of those are the properties of a distributed ecosystem. where the core Hyperliquid team is not, in control of the fate of the network, on an indefinite time horizon.
That makes sense. So, Shayan, would you so like looking at Multicoin historically, like when Multicoin was super bullish soul, you guys also became deployers of capital into Solana ecosystem projects. Is that how you also think about the Hyperliquid ecosystem, where we want to make bets within the Hyperliquid ecosystem as Hyperliquid betas, or is that more of a distant thought right now?
So I want to be very clear. We are still extremely long Solana, right? We can, and I'm happy to kind of put these two against each other, but I think it's worth mentioning at this point, which is, like I said earlier on the trade-off space, right? They just have different trade-offs, and there'll be different versions of product market fit, right? Solana has gone for credible neutrality across some definitions and a threshold degree of performance. Hyperliquid has gone for less credible neutrality and substantially more performance. And what that means is it's going to acquire different sets of takers and makers, right? If you just think of even the L1 as like essentially a rails for facilitating exchange, there's different people who participate in different environments. So today, if you're a founder, it's very hard for you to like build something net new on Hyperliquid today. Like you can't launch an asset, for instance, a founder that's trying to launch a token. It's just not going to happen on Hyperliquid. Solana is still the place for these early stage founders and developers trying to experiment with these primitives and do something new in a more permissionless way. And then conversely, you have all of these large, regulated financial institutions doing net new issuance. That's going to continue to happen on Solana. Solana is going to dominate that. I don't think Hyperliquid is going to be the place where Apollo goes and issues pieces of private credit. Like it totally might happen, but I think currently probabilistically it's much easier for that to happen on Solana. It's just a much clearer sense, right? So I just wanted to caveat that first. But you're right in that we, over the course of the last 5 or 6 years have partnered at the earliest stages with some of the most foundational pieces of infrastructure and core, primitives and core protocols on Solana, things like Jiro and Camino, squads, and I think on the order of 10 to 15 other names that like are essentially dominating the vast majority of Solana kind of transaction activity across spot, perps, Borderland, things of that nature. I think as Hyperliquid begins to attract that, and already has to some extent, right? There is a critical mass of deployers. There's a critical mass of the people are taking swings at it, and you've also seen like a handful of those teams kind of shut down more recently, right? Like I think the Dream Cash example is worth noting, and there's a handful of others. What we've realized is that if you are building in this ecosystem, there needs to be a very clear reason why you have a right to win, which is if you launch this asset, if you were, let's say, a deployer, why are you uniquely able to be the deployer? Do you have a price feed, or do you have an access, or do you have some set of market makers, or do you have a minimum threshold of conditions that need to be met to make sure that you can build a robust liquid market, however it is that you define that. And then as a front end, right, like you have the right to secure order flow, right? Do you have the right to actually take this product and go out and get 1 million users, each of which were trading $1,000 a day, right? Like, if you can answer those questions, there is a reason for you to exist. TradeXYZ is a very good example of this, right? They figured that out. They did it in a phenomenal way. And then there's the longer tail of things. Just like every single startup, every single product in the world there are the returns all kind of concentrate to the best performers that have some sort of unfair competitive advantage. And all of this to say that, yes, we are investing in the Hyperliquid ecosystem. We're still in the late stages of wrapping up around here, but we've already made one investment in the space, and we expect to make more. And it's all built on what is the unique differentiated insight, what is the unique access that you have towards taking the product built on top of the ecosystem, packaging it, and getting the right types of users to use it. So yes,
Yeah.
we absolutely are keen on investing in primitives and applications and builders that are on top of the ecosystem.
100%. I mean, it has been this trend of you see like very novel things kind of go launch and the team kind of supporting in a way, but after 6 months they kind of shut down and either the core team launches it or Trade XYZ kind of launches just a feature and that kinds of nukes all these other smaller teams. But I kind of want to go back to our previous point, Sharon, regarding the Binance comparison. And you mentioned that right now the most of the value is kind of accruing to the app, and you should be long the app. Like right now, Binance is kind of this behemoth. How do you, let's say right now, they have a bunch of other shit going on as well, right? They have bunch of other businesses and services. They have so many products and stuff. Do you think the most of that equity or the token value is still sitting on that exchange? Because one of the things in the report is you guys are comparing how much Binance has done and you being early to it. But like how much of that equity value kind of just sits on the exchange compared to all these other
Yeah,
services?
totally. Um, in some ways, the BNB report was actually written before I joined Multicoin. It was authored by Spencer. In some ways, the BNB report is really just sort of like the precursor to Hyperliquid. It kind of took like 6 years. Like Hyperliquid might be the right instantiation of the BNB thesis, which is the same thesis, which is like, exchanges and venues that can ingest order flow and manage and handle that at scale are just like rocket ships. They are disproportionately able to accrue value and then compound that, year after year after year. And you've kind of seen that in the trajectory of Binance. I think one of the things that just went sideways in our underwriting for Binance was, and we sort of saw naturally that BNB chain was going to be a thing in some way. They were going to launch an L1 in some capacity. But I think what went wrong with BNB as an instrument to capture all of that value is there used to be, this model of exchange tokens, right? If you look even back in the day, all of the large
Yeah,
exchanges had tokens out there, and you'd be able to see, on certain pages how much trading volume, how much revenue the exchange did, and then you'd be able to see, they each one would have, whether it was OKX or KuCoin or Huobi back in the day,
yeah,
if you can believe such a thing. All of these exchanges would provide some degree of color around what was happening on the back end, and then take some of those revenues, carve it out, and funnel it into buybacks. And that was, we thought that was the clearest possible way, and it still is the clearest possible way, as you see a lot of people kind of clamoring for
yeah,
buybacks in the public markets. That is just in, you can't fight that, right? When someone is showing you that I'm taking dollars and I'm going and showing up on the order books and buying it, and here are the receipts of me doing that, it's very hard to say that is, that is not real sound sustainable revenue. Now you can mess around with, and I'm sure some of these operators did, with the
yeah,
actual, percentage of that, whether it's actually a third of the gross profits, or if it's actually half of it, or actually a quarter of it. Who knows, right? But you can take at face value what is showing up on the open market. BNB shifted away from that model and essentially directed all of the value capture to, let's call it REV from the L1, which is a much squishier thing, right? And so you have all of the core value capture that is from the centralized exchange. You know, my interpretation of it, and correct me if I'm wrong, is essentially going purely into Binance equity right now, and the
yeah,
token is not the right instrument to own for that. Conversely, you look at Hyperliquid, there isn't an equity entity that anybody knows of, and we know this because it is, and this is where the L1 aspect of it becomes interesting, is like you can verify how much revenue is being generated. You can verify and see how much of that, earnings is going and showing up in the form of daily buybacks. You can prove the direct link between the instrument which you are owning, which is Hyperliquid or Hype token, and the actual enterprise value that is being created and generated by the platform in the form of those buybacks. And so it's just, it's kind of like you've come full circle, right? They've built it from first principles, they've done it correctly,
yeah.
and there's no misalignment between where the value is and where the value should be going, which is why it's much easier to own Hype, to go along the thesis.
Yeah. I mean, the way to understand it is also so much simpler, and the way to convince someone to underwrite this business is also much simpler than anything we have seen before in terms of exchanges and protocols. But Shan, one of the main pushbacks I saw when you guys launched this, and some of the analysts were like, "Why is Multicoin kind of using coming to a conclusion by an analogy, which is something you guys previously have not done?" Is that pushback valid? Like, compare, does this kind of comparison and through analogy make sense? Is there any validation? Like, is that criticism correct for you guys? And any thoughts on just that pushback you've seen?
Yeah, I think it's totally valid criticism, which is why you know, one of the defining principles of multicoin, one of the reasons why I think it's a unique place to be, practicing investing, is we try to be first principles, you know, every day, right? In every investment decision, in every decision that gets made as a firm, our goal is to try and take all the information that we have and arrive, independently at conclusions as to what to do, as opposed to comping to things that have happened in the past, because you don't need me to repeat it, right? Which is reasoning by analogy actively leads to the wrong conclusion. I think that is still absolutely true. I'd say the reason for the comparison, though, is slightly different, which is the goal of publishing this report was not necessarily for us to reason about our thesis internally. Like we've done the work. We have the position, right? We've done the work and we have thought about it ourselves. Our goal with this was to try to make the thesis accessible to, other potential, allocators of capital. And the reality is that when you are trying to explain something to someone else, analogies are productive. They are useful. They are,
Yep.
and BNB in particular as an analogy is helpful because it paints the through line of the core thesis, right? I would say that this paper, which we all co-authored, stands on its own without the comparison. Like even if you take the BNB sections out of the paper, there is nothing inherently about the paper that falls flat or is weak or does not actually present the case from a first principles basis. And so I think it's just sort of like it's sort of a way to make the story legible. It's a sort of a way to make the story accessible. But yeah, I fully take the criticism, but I'll say that the hidden reason for that is just to sort of like paint the picture and paint the story as to like how we got here.
100%. Okay, going back to our previous thing, optionality on the ecosystem side. I think in many people they are bullish on what's happening on Hyperliquid, about tradexyz, what they have built with Unit, and the RWA volumes, open interest. But one of the criticisms we see often is the lack of optionality for users in terms of the stable coins. Like we have seen this USD hedge kind of sunsetting and them adopting USDC as the main thing. And people were like, okay, they were trying to king make this thing and that got taken over. And now this is the only standard we have. Do you think that's like a long term problem or an issue you see where this lack of optionality is actually not a good thing?
Yeah, I mean, I'd say I would frame that slightly differently, which is what is the what is the what is the most credible, long term, you know, sustainable path for a certain primitive, if that should be internalized by hypercore or the protocol itself. I think you should assume that it will be, right? And if there is something net new that the core, you know, hypercore team cannot accomplish themselves in the form of, sourcing liquidity for certain, longer tail names, or acquiring certain set of, users, or building new markets that really they would not be able to do themselves, then there is a case to be building on top of things, right? You kind of see this across all ecosystems where certain foundations or certain core protocol teams will take the view that we are completely neutral and anyone can build whatever they want, when in a lot of cases that may not actually be the right strategy, right? The right strategy may actually be to enshrine and ossify a specific player and make the product experience for your end users the best it can be, rather than having dollars fight against each other across 3, 7, 8, 12, 20 different options, and leave the market sort of feeling as though, like, which of these should I be fragmenting market share, right? Like returns come from concentration in general, and generally when you have a market, there is that sort of power law that happens. The vast majority of teams that try to build something fail, and then one or two of them have success, and then maybe it ends up as a duopoly, maybe it ends up as one of them has 80% share, the other one has 20% share, just let it go. I think what's unique about what Hyperliquid does as a platform and as sort of like a, you know, as a player, you know, in called protocol governance in terms of primitives deployment, is, you know, clearly they take the view that having the right answer, building it, and owning it, if that delivers a better if that delivers a better product experience for the end user, then they will, then, you know, they will own it. And so, and for what it's worth, I think that is the right set of trade-offs to make for an application that is becoming vertically integrated, because you will always have this tension of, well, what am I supposed to build, right? If they're going to build this a stable coin, then what am I going to build? I think the answer to that is, you ask the inverse of the question, is like, what can they not build? And then if the answer to that question is compelling enough and large enough as a market, then I think you go and build that.
So, do you think we have seen like this HIP3 bottleneck deployer stuff where right now, I don't know if it's 100% or 99% everything is tradexyz. Do you see that growing in the future? And anything outside of, let's say, just the RWA side or anything new primitive that you want to see go live? Let's say options or anything that is of interest for you guys?
Yeah, I think for what it's worth, I'd say I would, my guess would be 12 months from now, tradexyz is not 99% share on HIP3. I would say that number is lower. I think what you're just seeing is like natural selection in the markets, right? You're seeing the deployers that, you know, are able to source deeper liquidity on names, because you'll see, you know, you'll see the same name on tradexyz, and you'll see it on Dreamcash, and you'll see it on like a handful of others, right? But tradexyz's volumes, open interest, are substantially better because it just happens to be that they have figured out a way to make liquidity, you know, first class citizen for those names, right? And so it's again what we described, which is, in any startup, in any product, you have, you know, some set of winners, and then you have a longer tail of folks who are struggling and maybe will eventually shut down. But then, as you know, as you've kind of followed it from the Binance to the Hyperliquid story today, there is competition. There are new players who find new vectors to compete, whether it's through new assets, through tighter forms of liquidity, through new forms of distribution, through lower fees. You know, there are 30 different, this is a competitive space, right? If you look at the chart of like exchange volume over the course of the last 10 years, you will never see a clear winner. You'll never see a clear winner persist for more than 2 years, right? Things change very, very quickly. There are new entrants. And so I think that you will have new entrants across, you know, across all of these different deployers. In terms of new primitives that I want to see, you know, built on Hyperliquid, I think HIP4 is still extremely underexplored. It is, you know, I feel like the approach that's been taken to prediction markets is subpar. I think it needs to be, you know, you need to find novel markets that, because look, it's the same thing as every form of competition, right? If your
Yeah.
competition is culture and poly market that is 10 or one order of magnitude, you know, deeper books than you're just not going to win. So you need to find what are the set of markets that you're uniquely able to serve, how can you source liquidity for them, and then, you know, essentially build something in the prediction space that is novel and unique. I think there's a huge amount of interesting stuff to be done there. I think options are very obviously kind of like equally interesting. You know, I think crypto gets very, you know, perps build and thinks perps are like the end all be all instrument for everything. And I think it's great. Perps are, you know, probably one of the most interesting things that have happened in finance more broadly in the last 10-15 years. Um, that said, they're not, you know, a one size fits all, right? Like I think options as an instrument to acquire leverage are almost underpriced right now, right? Which is you know, if you are the marginal perps trader and you really don't know what you're doing, you can get blown out very, very quickly. Whereas if you're trading options, your downside is still somewhat capped, and
Yep.
that's interesting, right? That's interesting in a way in terms of constructing risk preferences. And, you know, some people will still go 50x long, you know, on the 1 minute candle, and great, they should have the ability to do that, right? But I think you will also have people who are um, slightly more measured and want to find different ways to express that risk. So I think options are
Yeah.
super interesting. I think net new assets, right? Like there's this general pattern of of putting equities and trading them synthetically on these venues, which has definitely shown some degree of product market fit. um, I think some of the pre-IPO markets are also super interesting, but I want to see new asset classes come on. I want to see like tight spreads on things like FX or like net new commodities like compute or bandwidth or things of that nature, right? I think
Yeah, I
it,
mean, I would like to
yeah,
see like, I mean, stuff like coffee or something like oranges
totally,
going crazy. I mean, every
absolutely.
time we see that coffee is up 40%, and I'm like, can I trade that on Hyperliquid? That's the
Yeah,
first
you
question
should.
I
You
get.
should be able to. Exactly. And that's what I mean. That's the market, right? Like maybe someone goes out and builds coffee perps, like just for people who want to trade coffee, and then you source more liquidity and you are able to order more. I'm obviously being a little, you know, unserious here,
Yeah,
but like you can imagine, right? Like those are the wedges. Those are the wedges to go after, which is take these because the reality is like think of yourself if you're like a new founder, right? You want to build a new market, you want to build or you want to build a new exchange. The hardest part of that whole process is all of the underlying rails. How do you build a margin engine? How do you build a risk engine? How do you build a stable coin that has sufficient amount of liquidity? How do you build security around building an exchange is hard work, right? Then we've seen this from to no end, right? Like exchanges are honeypots when they get very big, and if you have any vulnerability, it's a real problem. What I think of Hyperliquid as is just taking that hassle out of the mind of a founder, which is
yeah,
my job is to enable markets and to create markets and to source liquidity and build robust markets, right? But I don't want to build the core infrastructure around it. I want to be responsible for owning the relationship with the end user and figuring out the nuances of how price discovery happens on that asset, and that's it. And for
yeah,
that founder or for that developer, this is a very compelling set of options that have been given to them, right? Which is, and look, there are still problems with it. It's still not as clean as Solana, where you can show up today and start building something without any permission from anyone, right?
yeah,
On Hyperliquid, if you're deploying HIP3, you still require a very significant amount of capital in order to start building. Obviously, that's a bond, and it's riskless, and there's different ways of sourcing that, but it is not permissionless. But that is serving as a filter and as a gate for the most serious of application developers, and my guess is over time that'll come down in some
yeah.
ways. But yeah, just having these rails without having to build it from scratch is meaningful. In some ways, this is sort of the composability thesis that we've talked about in the past for in other L1s, is being able to use the primitives, and in this case the margin and the risk engine, and just build new interesting things on top of it.
Yeah, I think we're already seeing that where people who are already successful and they already have a thing going on and they want to add perps because the users want it. Like Phantom is is like probably the best user experience ever in crypto, and it's awesome onboarding tool. And them benefiting from adding perps is not surprising at all. Same thing with FOMO right now with what they're doing, right? And I think, as you said, people with capital they're easily able to integrate, and they're already seeing that impact of generating 100K a day in like couple of weeks. So that's all awesome to see. But I want to ask Sharon regarding the trade XYZ and Hyperliquid kind of relationship, because the volumes of trade RW assets is 100x more than what crypto are in general. Uh, and at some point, and I think they're already at, in terms of open interest and some of the volumes, they're already doing more than the Hyperliquid, the app itself. Do you think at some point where this will actually flip in terms of volume and everything, what does that kind of make about their relationship with each other? And people always have this. Right now they're in the growth mode. Will that kind of be turned off? But how do you see that play out, right? Like this is becoming so big so fast, but how does it like kind of play out when one is bigger than the other?
Yeah, I think that you know this is sort of like the inherent problem with, are you a platform or are you an application, right? It's like, and if you are truly a platform, you know, and I can't speak for Jeff or the core Hyperliquid team. I think we're gonna kind of see this play out in real time, right? Which is, how much value do you want to internalize and basically own 100% of, and how much value are you happy to see get created on top of you, and you only take, let's say, 20% of that, right? This is what, like, Apple and Microsoft and every app store on the planet, and essentially anything that calls itself a platform has to deal with, right? And I think the question is, do you consider yourself a platform or do you consider yourself an application? And the reason we are bullish Hyperliquid as an L1 is because we see it as a platform. We see it as a way for other people to, build applications and do interesting things with. Now, the reality is that you have still the headline figure that I think is the most underrated is the vast majority of flow transactions go through the hyperliquid.xyz front end, right? They are still, and so that relationship, when you think of the marginal developer that's building on Apple, that's publishing an application, Apple could theoretically have gone and built that themselves, but they would rather have that application developer build, and they'll take 30% on all transactions, because it turns out that Apple makes more money by not building everything themselves and like allowing other people to build it and then taking a rake on the bottom of that. And that's what all the fees are right now, right?
Yeah.
And the reason the developer comes to Apple is because of distribution, because they know that they can get into every single Apple device on the planet. Today, tradexyz is on Hyperliquid because Hyperliquid still has distribution. It is just objectively the case, and you can see it through the front end charts. I think as long as that is true, there is no incentive for tradexyz to go anywhere else. The second you see that flip, where you see tradexyz is potentially the vast majority of the order flow, then maybe you can start asking the question of, like, do you go somewhere else and maybe abandon Hyperliquid? Which even then there are 30 reasons not to do that, because how disruptive it is, how to like rebuild it from scratch, how you have to manage the risk on the existing positions. It's deeply non-trivial to just sort of like abandon an ecosystem like this, where there is so much risk already entangled in this whole system.
I think
But
we
even
see this
saying
common
that,
in.
there's no incentive for it right now, at least from what I
Yeah.
can see.
Yeah, sorry to interrupt, but we see this often in crypto where an application on an L1 or an L2 becomes so successful, they think it's a good decision to go and launch their own chain, and but then by doing that, they kind of leave out all of the distribution and the kind of the recall that a normal user has. And the people usually ask this question. I don't think, maybe because it's kind of, there's so much of upside in terms of participating on Trade XYZ. That's why they ask this question if they'll have their own token or they'll have their separate at some point. But do you see that as a possibility, like them having their own token? Is that like, because that plays a big role in your thesis as investors in hype, right?
Yeah, I think also, does Trace the XYZ play a part in you defining Hyperliquid's bull and bear case? Is probably a better way to frame the question.
Yeah. Look, absolutely. It's very hard to look at Hyperliquid today in absence of tradexyz, right? Like, a lot of the most interesting activity is primarily as a result of that, right? Or like at least the most interesting stuff on the HIP3 market side has come from there. Look, in terms of whether they choose to launch their own token, I don't see any problem with that, right? Like, for instance, for now, tradexyz is generating some set of fees that are exclusionary by definition to Hyperliquid. Like, they are making money that Hyperliquid is not making, right? If they launch a token tomorrow and try to say, hey, this is functionally the same instrument, and we are going to route the fees that we get into this asset, then great. People in the public markets have another asset to go and buy. But it's not inherently cannibalistic to Hyperliquid until they choose to move all of the rails off, until they just choose to migrate completely off of Hyperliquid, which, again, as I said earlier, I just see no incentive for them to do right now. And even in the future, just the amount of pain associated with that is unnecessary, right? Like, It's just incredibly difficult. But right now, I see it as a very low probability. Um, and so, yeah, I would say them launching a token, like, great. Like, people should, more assets, more ecosystems, like, maybe become more of a viable path for new founders to feel like we should build our own deployers or build our own front ends or do whatever we can. Look, again, most importantly, where is the volume going, right? Like, who has distribution? Like, it's the same principle that we learn over and over again, which is owning the customer relationship is the thing that is the most important. Until you have that, and then there are 30 other decisions to make downstream of that, which is like, how sound is your system, how comfortable do you feel, can you source stablecoin liquidity, blah 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 blah, right? But like, there are all of these structural things that Hyperliquid today has that makes it seem to me that tradexyz going out and launching a token would not be inherently cannibalistic to it. And I think the prospect of them leaving Hyperliquid, however it's defined, which is I think the question behind your question, is just increasing. It's just very unlikely to me that I don't think it'll happen, right? And look, maybe we live in a world here 12 months from now where there are 6 trade XYZs, right? And one of them decides, hey, I'm going to go off and do something on my own. Phenomenal, right? Like, it doesn't like, let the free market do what the free market has wants to do. We feel confident enough in the core underlying network effects and essentially the value proposition of Hyperliquid as a platform to all of these different teams, that it does not impede kind of our thesis in the long term.
That makes sense. Shayan, we blocked an hour for this. I think we're in the final stretch of the last 10 minutes. We talked a lot about what Hyperliquid can be in the future, and obviously with the perp side being the heaviest right now. As someone that works a lot on the spot side on Solana, personally, what do you think about spot markets on Hyperliquid? Is that also part of your valuation framework for Hyperliquid's future? Do you see them sort of listing stocks and curating spot markets in the future as well?
Yeah, look, I'm sure there will be liquidity on spot. There is still liquidity on spot assets for major crypto names, and it's basically comparable to any other centralized exchange in terms of the universe of assets that can be traded. You will see teams try and figure out ways to wrap equities and find spot wrap certain forms of commodities that are maybe less high velocity and people want to own spot on them. You will see experimentation on those things. My view is that Solana is going to win spot. I think the market structure for Solana on spot is candidly strictly better, for 2 reasons. One is prop AMMs as a liquidity primitive, I think, are superior. And two, in terms of the credible neutrality that is needed from net new issuers, Solana just gives you a substantially better shot of aggregating liquidity on the supply side on the issuance of these assets and giving strong guarantees to the issuers of the assets to where should we go and put these assets on chain. And so, look, I think spot is going to be more competitive in the near future. That said, I don't think it's necessary for Hyperliquid to win spot in the long term for it to be just a mammoth outcome in the way that we think about it. I
Yeah.
think the derivatives are a phenomenally large market. Solana has some work to do on derivatives, but that's sort of the yin and the yang as we see it.
Yeah. Another thing, like one of the because so far over the last year or so, whenever we talk about Hyperliquid, we usually are okay, compare it to this Perp DEX, compare it to Lighter, compare it to Aster or whatever. And right now, I think we are in the phase where we are comparing it to CME, we are comparing it to Robinhood perhaps, or we're comparing it to some of these institutional giants that are, I don't know, worth, I don't know how much IBKR is worth, maybe $100 billion or something. So we have entered, like, this Hyperliquid has entered big leagues right now, where there's not just product to product comparison, but there's also a regulatory arbitrage that kind of happens as well. How do you think this kind of plays out, right? Robinhood is kind of finally on chain. They've launched their chain and they're doing decent volume, and they've announced a partnership with Lighter. We'll see how that plays out. But since Hyperliquid is now in like a different league where the competition right now is actually very big, how do you think this plays out? Let's say, I don't know, 12 months from now, in terms of them entering US in a big way? How do you think this kind of, because this competition is for real now?
Yeah. And look, it's competition from all sides, right? It's competition from the permissionless kind of on-chain universe and things that look like lighter. And then it's competition from the Kalshis and the Coinbases and the Robinhoods and the Rotheras of the world that are also taking perps and primitives and putting them on chain, onshore, and over regulated rails, right? And our general view on this has been the more competition, and it's sort of a general point of principle, when there's more competition, it proves to you that the market is real. No one is competing for, like you won't see five competitors for a business that doesn't make any money, right? And when you see more competition, usually the sign is that you're onto something, because the market is probably larger than you expect. And one of the things that happens is that when there is new competition, they attack on different vectors. They, the US regulated players are trying to legitimize perps as an instrument for people that Hyperliquid cannot touch today. And similarly, the Robinhood chains and the Robinhood lighters of the Robinhood lighter integration, I think, is one of the most interesting ways of essentially expanding the overall TAM of the category, right? Because they are going to take their wallet, they are going to find, they have incredible brand recognition, they have incredible brand trust. There's a whole new cohort of users that's going to go on, and they're going to trade their first perp on Robinhood. And that's great. I think that the it kind of sounds like communistish, to say that, hey, there's enough for everyone and everyone can go and win, and certainly don't mean it that way. But there is a very legitimate way in which the more players there are, the more legitimate the core platforms become, which means that people can go and try different versions of it, and then the market actually accrues to the best players. And so I think that all of this stuff is, yes, notionally, the reality is Hyperliquid will not get every single dollar of every single perp contract that gets traded on the planet. It just, at least as it's currently constructed, that is not kind of how it's designed. There are certain people who structurally will not be able to trade on this thing. But I think it's better that those people are able to trade somewhere, and then eventually Hyperliquid can find a path towards becoming accessible to them? Absolutely, right? I think that all of this is damn expansionary in a lot of different ways, and it's net good that there are more players building here.
Yeah. And one thing, recently OKX founder talked about. I mean, recently you've seen Bybit and Binance losing their Europe licenses, and that kind of them shifting over to the on-chain wallet space. But can you, like, he mentioned that Binance operated in this area of regulatory arbitrage, and they've been able to take advantage of that for so many years, and that's why they were able to accrue so much of volume and assets. Do you think like Hyperliquid is in that stage right now? I know that's like a bearish point of view, but is that like one of the risks that you've kind of mentioned in your report where?
Yeah, to some extent. I haven't. I apologies. I haven't actually seen the. I've been trying to minimize my crypto Twitter intake more recently, and so I haven't actually seen the interview that you're talking about. But I think I understand the shape of the question you're asking, which is, um, it is an offshore exchange, right? And it is to some extent unlicensed, and there is, whether you, I look, maybe regulatory arbitrage is, yeah, a very loaded term in general, I think, for what is essentially, you can, some people will call it regulatory arbitrage, some people call it permissionless innovation, right? So whatever, however you want to frame what's happening here is kind of what it is. But I think it's very hard to deny that a lot of the product market fit has come from the fact that it is open, permissionless, currency neutral. And look, ultimately, it is the way these systems should work. You should not be gated by um, by some arbitrary set of licensure that is preventing you from building these things. Now, I'm all for compliance and doing things the right way, and I believe that you will have these wrappers on top of these systems as well, right? I'm also certainly not of the opinion that anything that happens on the internet is, or like code is law, and like law is not. Like, no, like the law is real, right? Compliance is real. Regulatory good standing is an increasingly important part of what you want to do. But you can, there is a path dependency to these things. These things can happen in phases. These things can happen over time. And I think that you will find that whatever advantage has been captured in this moment is absolutely important for them. But is that going to continue to be the driving force behind them? I don't think so.
Yeah, and them launching Hyperliquid Policy Center and building out that team to kind of fight the fight in DC is also promising. But yeah, Shayan, we are at the final, almost reaching an hour. But one final question for you. I know that you guys gave bear case, base case, and bull case at the end of your report in terms of valuation and stuff. Quickly, how did you come to those numbers, uh, and what will it take to get to those numbers? But yeah, just your thought process of how did you put those multiples and reach those revenue figures, and like how did we
Yeah.
get to 689 per hype?
Yeah. And so for those of you who are following, you can see this sort of in the last section of the report that we published, for kind of more detail. But I just say high level, that you back into that number through, essentially three, and ostensibly one-fourth variable, which is the stablecoin float yield. But the core three assumptions that go into that, backing into that number, are total crypto derivatives volume, the share of that is, decentralized exchanges, and then the market share in Hyperliquid on of that, of the decentralized share of that. And you essentially multiply those three numbers to get a sense of like what is roughly the, the top line number that you're looking at here. Now, how you choose to flex up or down those numbers, I encourage everyone to just sort of like go with their own. Look, we are in this industry and we are investing here because we are outrageously bullish where these numbers are going to go. Right? We think that we're at a very unique moment in time where this technology, these market primitives, are becoming legitimized for the rest of the world. And the 10,000 people you see on crypto Twitter who trade these things all day are going to become 2, 3, 4 orders of magnitude higher in number over the course of the next kind of 5 years or so. And so, really, all you're backing into is what is total crypto derivatives, how much of that is DEXs, how much of that is Hyperliquid, and that's basically it. You can play around with those numbers. I've seen criticisms of it's too high, and I've spoken to people who say it's too low, and it's like the point of this is not necessarily to look. These are our assumptions. That's how we think about where the market is. I encourage everyone else to kind of take whatever they want, but like look at the scale of the numbers. Whatever you end up choosing as your version of it, please play around with it. You'll find that it's still underpriced relative to what it's going to become by a significant amount. The numbers you see in
Yeah,
that doc are our best faith estimates of what we think that can be. Maybe it'll be higher, maybe it'll be lower, who knows. But yeah, that's what we try to do as investors, is try to project out a little bit, and we encourage everyone else to
yeah.
do that.
House of finance we're talking about, so definitely something that's not
Yeah,
the way you value
yeah.
it
I
is
tell
definitely
people, I
not.
tell people, I tell people this sometimes. It is like there's a general sentiment that all the exciting stuff in crypto is, all the exciting stuff in the world is happening in AI. It's not happening in crypto. The TAM for crypto is all the money in the world. That's kind of what it is. Like it's like that's never been small TAM. Like it's only getting more and more real. You know. And if you think AI is going to create all this new money, then like crypto is going to be part of all that new money too. So, I think the TAMs are just astronomical, and it's a very unique time to be doing all this.
100%. That's Shayan from Multicoin, guys. Thank you so much, Shayan, for your time. This has been a pleasure. Hopefully, we do this again sometime soon. But yeah, thank you so much for your time.
Yeah, this was a lot of fun. Thank you so much for having me back, guys. Thank you.
Thanks, Sharon.